Section 9 of the Income Tax Act, income deemed to accrue or arise in India. I have covered section 911 to section 914 in my previous video. In this video, I will be covering from section 915 to section 918. Section 915, income by way of interest payable by a government. If the interest is payable by the government, then income is always deemed to accrue or arise in India. Residential status of the payee, that is to whom the interest is paid, and place of receipt of funds, that is in India or outside India, will not affect it. A person who is a resident, except where the interest is payable in respect of any debt incurred or monies borrowed and used for the purposes of a business or profession carried on by such person outside India, or for the purposes of making or earning any income from any source outside India. Let us understand with an example. Mr. A is a non-resident. He gives a loan of $50 lakh at 10% rate of interest to Mr. B, who is a resident. Mr. B pays interest of $5 lakh on the loan. Interest received is not deemed to accrue or arise in India if received outside India and business is outside India. But what will happen if interest is received by Mr. A, who is a non-resident in India? In such a case, it will be taxable in India as income is received in India. So very important here is interest is received outside India, end use is outside India, and recipient of the interest is a non-resident, then this clause is not applicable. Let us understand with an example. Mr. A is a non-resident. He gives a loan of $100 lakh at 10% rate of interest to Mr. B, who is a resident. Mr. B pays Mr. A interest of $10 lakh. Loan is used for business and interest is received outside India. Mr. B uses $60 lakh in India and the balance $40 lakh he uses outside India. In the first case, the end use of funds is in India. That is why interest income of $6 lakh is deemed to accrue or arise in India and taxable for Mr. A. In the second case, end use of funds is outside India. Hence, interest income of $4 lakh is deemed to accrue or arise outside India and hence not taxable for Mr. A. What will happen if Mr. A is a resident? Entire interest of $10 lakhs is taxable in India, as for resident, global income is taxable. What will happen if Mr. A is not ordinarily resident? Interest of $6 lakh is taxable in India and interest of $4 lakh will be taxable in India only if the business carried outside India by Mr. B is controlled from India. A person who is a non-resident where the interest is payable in respect of any debt incurred or monies borrowed and used for the purposes of a business or profession carried on by such person in India. Now suppose Mr. C, who is a resident, or he may also be a non-resident, he gives a loan of ₹50 lakh at 10% rate of interest to Mr. D, who is a non-resident. Now Mr. D pays Mr. C interest of ₹5 lakh on the loan taken. Loan is used for business or profession in India only then interest is deemed to accrue or arise in India. Now what will happen if Mr. D borrows from Mr. C for purchasing a property or plot of land, for building a house for himself, or borrows for investing in the shares of Indian company? In such a case, income will not be deemed to accrue or arise in India as loan is not borrowed for business or profession. For understanding this clause, we'll first see the example. There is a multinational bank called MNC Bank Limited, which has an head office in USA. It has a permanent establishment, MNC Bank India, and it has got a branch in Dubai, MNC Bank Dubai. Now, any interest payable by MNC Bank India to MNC Bank USA will be deemed to accrue or arise in India. Similarly, any interest payable by MNC Bank India to MNC Bank Dubai is also deemed to accrue or arise in India. This same has been explained in the explanation above. Now let us read that. For the purposes of this clause, it is hereby declared that in the case of a non-resident being a company engaged in the business of banking, any interest payable by the permanent establishment in India of such non-resident to the head office or to any permanent establishment or any other part of such non-resident outside India shall be deemed to accrue or arise in India and shall be chargeable to tax in addition to any income attributable to the permanent establishment in India, and the permanent establishment in India shall be deemed to be a person separate and independent of the non-resident person of which it is a permanent establishment, and the provisions of the Act relating to computation of total income, determination of tax, and collection and recovery shall apply accordingly. Permanent establishment includes a place of business through which the business of the enterprise is wholly or partly carried on. Section 916, income by way of royalty. Since I have discussed interest payable under section 915 in detail, and this section being similar to section 915, I will explain it in brief. The only difference is in clause C, a person who is a non-resident, where the royalty is payable in respect of any right, property or information used or services utilized for the purposes of business or profession carried on by such person in India, or for the purposes of making or earning any income from any source in India. So in the earlier section, that is section 915, in case of interest which is payable by the non-resident, income will be deemed to be accrued on arise in India only if it is utilized for business or profession. Whereas in the case of royalty, a person is a non-resident making royalty payment for business and profession and for any other source of income, then it will be deemed to be income accrued or arise in India. Royalty refers to a contractual payment by a person for the use of assets belonging to another person. The payment includes royalty for the use of any patent, invention, model, design, secret formula or process or trademark or similar property. Royalty includes any lump sum consideration but excludes any consideration which would be income of the recipient chargeable under the heads capital gains. Royalty includes and has always included consideration in respect of any right, property or information, whether or not the possession or control of such right, property or information is with the payer, such right, property or information is used directly by the payer, and the location of such right, property or information is in India. Section 917, fees for technical services. This is similar to section 916, that is royalty. So let us understand the meaning of fees for technical services. Fees for technical services means any consideration, including lump sum consideration, for the rendering of any managerial, technical or consultancy services, including the provision of services of technical or other personnel, but does not include consideration for any construction, assembly, mining or like project undertaken by the recipient or consideration which would be income of the recipient chargeable under the head salaries. So most important is that if there is a employee-employer relationship, then this clause is not applicable. Income of non-resident shall be deemed to accrue or arise in India under section 915 or section 916 or section 917 and shall be included in the total income of the non-resident whether or not a non-resident has a place of resident or a place of business or business connection in India, or a non-resident has rendered services in India. Section 918 talks about gifts, that is any sum of money paid by a resident to a non-resident not being a company or a foreign company without consideration exceeding rupees 50,000 will be deemed to accrue or arise in India, that is it will be income chargeable to tax in the hands of non-resident. In case of immovable property, if the immovable property is given by a resident to a non-resident without consideration and the stamp duty value exceeds rupees 50,000, then the entire stamp duty value will be deemed to be taxable in the hands of non-resident. In case it is given by a resident to a non-resident for inadequate consideration, then the difference between the stamp duty value and consideration, if it exceeds 50,000 and the stamp duty value is more than 10% of the consideration received, then the difference between the stamp duty value and consideration is taxable in the hands of non-resident. Thank you. If you like the video, please click on the like button and subscribe to my YouTube channel.